Divorce isn't just an emotional crisis. It's one of the most dangerous financial moments of your life. And the mortgage decisions you make during it can follow you for the next 10 years. Welcome back. Welcome to Divorcing Strong, the podcast that pulls no punches when it comes to divorce. I'm Becky Sampson, better known as Bulldog Becky Brockovich, and I'm here to give you the straight talk, the strategies, and the subpoena secrets you won't hear anywhere else. With expert guests and proven advice, you'll learn your rights, your options, and gain your power that encourages a fair and equitable outcome. Divorce doesn't have to break you. It can build you. Let's get to it. Well, welcome everybody. I probably look like I have a different setting. And yes, it is true. I'm not in my studio. I'm actually out of town for the day because I'm going to be speaking tonight to a group of people on broken relationships and abuse. So I'm out of town prepping for that. And I'm grateful that you can do podcasts from anywhere. You don't need to be in the studio. So thanks again for joining us on another episode of the Divorcing Strong podcast. I am the host, Becky Sampson. And as always, I love bringing the professionals in this industry to this podcast to be able to give you good, solid knowledge and information so that you can navigate through your divorce strong, because that's the whole purpose of it. So I also wanted to just let you know that we are usually live Tuesday through Thursday. This week is a busy one. We've got 5 episodes. So if you're going through a divorce or you know someone that's going through divorce, please stay tuned, because every single time, and we're just going to get more and more laser with the questions that people have and the information that they need. We're going to get more and more laser with those people that we bring on. And please share these episodes. I think there's a little, look at that. I can even produce my own show here. Here we go. There's a like and subscribe button right there. If you go ahead and please share. It's awesome. All right. Well, so on today's episode of Divorcing Strong, I'm joined by Chris Henwood. And this isn't just those conversations that can quietly change the trajectory of someone's post-divorce life. When divorce hits, housing decisions aren't just financial, they're emotional, symbolic, and often rushed under pressure. Chris understands that from every angle. He spent 22 years as a trader on Wall Street, became a trusted on-air financial expert at Reuters, I think, attended law school at night, practiced securities and real estate law, and then made a deliberate pivot into mortgage banking. What makes Chris different is not just his resume, it's where he chooses to focus his expertise. As a mortgage banker at North Point Bank and a certified divorce lending professional, Chris works with people navigating divorce who are being asked to make some of the biggest financial decisions of their lives while standing on an emotional quicksand. He is licensed in all 50 states and Washington, D.C., and has helped clients across the country slow down, ask better questions, and avoid costly mistakes they didn't even know were possible. Chris's philosophy is simple, but very powerful. Listen first, explain clearly, and never assume one size fits all. So stay tuned with us, because understanding your options can be the difference between surviving divorce and rebuilding strong. So welcome to the show, Chris.
Thank you so much, Becky. It's really great to be here today.
Okay, so how do you say that again? Because
Reuters.
Reuters.
It's actually the world's largest news service, believe it or not. 192 or 193 countries or something.
And guess what? I totally messed it up, and that's okay.
You know what? It's a great kind of example of life, right? You know, we say things, we plan, we have this whole thing laid out. And then something happens that throws us off, and what do? You just fix it and move on. Like,
You just keep going. It's funny that you say that. This is kind of a funny way to start the podcast, but it is really interesting. I always say to people, you do not have to be perfect to be successful.
Oh gosh,
And
no.
and that is like such an important aspect to life. And I have to say, I play the organ, and most people don't know I play the organ. I'm not an organist. I'm actually a piano player, but they're two different instruments. But I learned this very fact that, one of the reasons why my sister stopped singing with me when I was young is because I would try to correct myself and go back and correct. And when you're doing that and you're accompanying in front of like 300 something people, you can't do that. That's it. The show must go on.
You got to move on. Absolutely. Nothing stands still. And I love the fact that you mentioned about being perfect, because I think in our culture and in the world today, we're all told that that's the goal. Like, that's what we should be. We should be perfect. Your life should be perfect. Your job should be perfect. Your marriage should be perfect. And the truth is, it's not perfect. And mistakes are made and errors happen. And you have a choice. You can focus on them, stay stuck, or you can move on. And sometimes that means getting divorced. And that's kind of why we're here and having this conversation. But some of the most successful people, I think, in the world of business and all sorts of endeavors will tell you they're not perfect. Like everyone, but they're not. They're just like you and I.
Yeah. And it's interesting also looking into marketing and things. It's the same thing. People are not looking for perfection, and they're not looking, really, they think it's AI, right? If it's that way. So
I'm becoming a big skeptic now for that exact reason. Yes.
I know. So let's be authentic and real. And that's how I've always been. So I appreciate that you're the same way. And this is a perfect way to start it, because we're really going to we're going to dive into some of the pitfalls that people make when it comes to mortgages. And one thing I really appreciate about you is your vast experience in life, so that you are, you're not so niched in one area, but you can really see the bigger picture because of your experience. So tell everybody kind of tell us a little bit more about that story of what got you to the point where you're at, and why are you passionate in helping people in divorce?
Yes, absolutely. Thank you. So, I often joke that I haven't quite figured out what I want to be when I grow up, because I have had such a varied, professional experience, from working on Wall Street. For those in the audience who've seen the movie Trading Places, I was one of those guys down on the floor screaming, yelling, and jumping up and down every day. I traded energy futures. It was a great place to be. However, once it all went electronic, the whole nature of the business changed, and it was different for me. And I actually took that as an opportunity to transition. So like you mentioned in my intro, I went to law school at night. I traded during the day. And then I became an attorney. And during that time, in the interim, I went to work at Reuters News Service, and they hired me to be their on-air expert for commodities and energy, which was great. It really just gave me a chance to get in front of a camera and talk about things that I had been doing for the past 22 years. So that was a great opportunity. Unfortunately, it didn't last very long. And so the company shut down the project. And then I started practicing law after I graduated law school. I did a little real estate law. I did some securities law. The part I liked about being an attorney was kind of the interaction with the client. And when you're doing real estate law, the opportunities for kind of truly counseling are very, very limited. Like, you really just interact with the client at the beginning. After inspections, you kind of talk about it. And then next thing you know, you're closing, you do the paperwork, and they're gone.
Right.
And that kind of I enjoyed it, but it really wasn't truly satisfying. And then a friend of mine.
It's transactional.
Very transactional. Yeah. And it's just boom, on to the next, boom, on to the next. And a friend of mine approached me and said, hey, you understand finance. You understand the real estate market, working as an attorney and helping people close their transactions. He said, come work in the mortgage banking industry. We'll figure this out. You'll learn what to do, and you can kind of help a lot more people. It's more financially rewarding. So there's that, being completely frank. But when I work with individuals, in divorce especially, but just in general, I'm counseling them from the first conversation, because a lot of people, especially first-time home buyers or somebody going through divorce who's maybe their spouse handled the financial transactions. And for them, they may have owned a house for 15, 20 years, but they know nothing about the process or what's involved or kind of the things to look out for. And so I found myself counseling clients like much more intensely and really being a part of their journey from the very beginning all the way through closing. And for me, one of the most rewarding and satisfying parts of what I do is when I get a call a year, 2 years, 3 years, 5 years later from somebody, and I haven't spoken to them in a while. And they're like, hey, I'm going to sell my house. I'm going to buy a new one. I'm ready to go. Or in our case, like things didn't work out with X and I'm going to be getting divorced and I need, to figure out what we're doing. I'd like to stay in the house or move it or whatever the answer is. And so I'm a part of that process with them. That to me is very rewarding and kind of makes me feel like, okay, I'm doing something right, helping these people.
I'll tell you, Chris, like that, the reason you, I think, talked last week, my background's in real estate. So I used to always say to people, look, I'm going to put you through real estate school. I don't want you making any decision until you understand what you're signing. And so the fact that they would years later be willing to come back to you, it's because of the relationship that you built and because of that trust in that. Yeah. So that is a really big compliment to you.
Thank you. And I just it's interesting that just prior to this podcast, I received a text from a woman who's actually a client of mine for about 8 years. And I've done 4 or 5 transactions. So she didn't trust the financial system. So she wanted to buy houses and she bought houses and rented them. She just kept buying houses. And so she texted me from Romania. That's where she's from originally. And she had just referred her sister. And she's telling me, I need someone to hold her hand. She doesn't know, it's brand new. And so like my heart swelled with that because like that's the highest compliment of a longtime client and just trusting me with her family member moving forward. And I think that's super special. And I take a lot of pride in that part of it. But as it pertains to divorce, that's something that you're in a supercharged, and I love how you mentioned before, like the biggest financial transaction, and it's a super like emotionally charged time. And a lot of times, you need someone just listen to what they're going through and what they're kind of experiencing. I often joke that I should wear a Roman collar sometimes because people really like to, and I'm sure you have the same situation.
Yep,
people
absolutely
just love to share their situation, right? And so it's very, very rewarding when you can kind of be the voice, the steady voice in all the chaos that's around them and just give them truthful, honest answers. In a time when, let's face it, during divorce, honesty sometimes can be in very short supply, like among the parties, among all the whole process can be very destabilizing, unsettling. And so I want to just be that guy who's like, here's the numbers. This is where we're at. And, oftentimes in this process, I'll talk myself out of business because a lot of times, like I only make money if the house gets refinanced or someone buys something and I do it. All of my advice and everything prior to closing, I don't get paid for any of that. And that's fine. I like it that way, to be perfectly honest with you. The key is sometimes you need to advise the client, you know what, the best thing for you to do is to sell this house and start over. And I love how you mentioned earlier, the emotional part of it, because our homes are such an it's like buying a home or selling a home. It's the biggest financial decision you're going to make, but it's often the most emotionally charged. And those two things usually don't coexist very well. Like you don't always make great financial decisions if you're super emotional about it, right? So we have to try to institute a level of kind of like rationality, slowing down, and I always tell every client, we just take everything one step at a time. We look at this, we see what it is, we see if it makes sense, we see if you're comfortable with it, because in the mortgage business, a lot of times people will be qualified on paper
Mhm.
to buy a house or refinance a house or buy cash out of the house to pay off their client. It may fit, but when you see what the monthly payment for that looks like,
Right. Yep.
oftentimes it's like, okay, like you can do this, but like, whoa, that's I'm not comfortable with that. Now we have to
Mhm.
reassess. Like, that's fine. Like, if you're not comfortable with it, then let's find a place you're comfortable. And if like buying out your partner doesn't work, the answer is to sell the home and start fresh. And sometimes with divorce, that's sometimes the best answer, you know?
Yeah, I shared actually a couple weeks ago when we were talking about mortgages on the show that I was my first divorce. I was in a situation where I no longer could pay the mortgage, and it ended up going to foreclosure. But I was so stubborn. I was like, I'm not leaving my house. Like, I'm not doing that. So I understand the struggle. There's already so much change happening that sometimes it's our very home that we don't want to leave and abandon because of all of the memories and all the safety that we feel there, or whatever it is. And so it's really important. One thing I really appreciate about what you said is that you listen first, right? You're there to listen, because sometimes when you're going through divorce, it sometimes people don't want to listen because there's too much drama, there's too much everything going on. But it's nice to have a stable person to be like, this is your biggest financial asset most people going through divorce have. So making the right decision is paramount to being able to do that. So I mean, what have you seen when, like, what's the biggest housing mistake you think that people make under that emotional pressure?
So that's a great question. So I would say the biggest mistake that they tend to make, and I try to counsel them, obviously, to the contrary, but because one of the things you can do when you're getting divorced is, like, say you've been a parent that doesn't make, you're not the sole, not the chief breadwinner,
Mm-hmm.
right? And
Mm-hmm.
now you're getting divorced, and you're employed, but you don't make as much money, but you're going to be getting a considerable amount of child support and alimony from your divorcing spouse. So we can count that as your income after you receive it for 6 months. So that's
Mm-hmm.
a very common way people increase the income to qualify for the house. But they have to understand that the child support is designed to go to child support. It's not like
Mm-hmm.
disposable cash you can just spend out the window. And so, to you, exactly what you said, the emotional impact, the emotional connection to the home. And I understand it, because having talked to so many people, the chaos that surrounds them, and
Oh
the
yeah.
destabilization and the uncertainty, they want to cling to something that's familiar and something that, like you
Yep.
said, holds those memories, holds, like, and if you have children, there's like, want to keep the kids from having any disruption in their life. And like, going back to my answer, your original question is that it's where they stretch to stay in the home in a way that's really not financially comfortable for them,
Mm-hmm.
under the kind of pressure of wanting to keep, like, the kids, like, have no change for the kids. I mean, you're getting divorced. There's a huge change for the kids. Like, no matter
Absolutely.
what happens, there's change that's happening. Kids, I think the thing, especially in our culture today, is we kind of forget how resilient kids are, how really kids can adapt to and kind of, adjust to a whole variety of circumstances. And I'm not saying that they just do it for the sake of doing it, but
Right.
I kind of think that if more people step back and just said, you know what, the kids are going to be fine because we're going to find a new place that we can afford. I'm not going to be as stretched as a parent, here with them. The other side's not going to be as stressed. We're not going to be in that kind of environment where things are stretched and everything is like, the pressure just increases in that sense. So sometimes just staying in the home for the sake of the emotional part that supersedes any kind of real financial consideration, that's probably the biggest mistake that I see people, say. And from my perspective, I try to make it as affordable as possible to try to do. I've even gotten so much as like had input into the negotiating process where how much can the buying out spouse afford? Well, that number, getting that number down where they're comfortable sometimes means the other spouse will accept a lower payout from it. Now, it doesn't happen all the time, but it's part of the conversation where you're saying to the financial advisor or even the mediator. I've interacted with mediators before where you're like, listen, this is where she can afford to, comfortably afford, and this is how much money we can take out of the house comfortably. And maybe there's another way to make up the gap into what the marriage settlement agreement is, et cetera, just for example. There are other ways to slice and dice this where we don't saddle the person staying in the home with an overly large burden financially.
Well, and I want to bring this to the attention. I know I've mentioned this before on one of the other podcasts as well, is that one of the things to consider is that if you are relying on income for spousal support, right? Is what if that spousal support doesn't come in? What if that spouse decides?
Yeah. So that's always a risk, right? For us to count it, technically under the rules, it has to be projected to continue for 3 years. Now, there are examples where, exactly to your point, right, where your other spouse pays intermittently, maybe like, the nature of the relationship, the nature of the person, how it goes, where they're paying some months, they're not paying other months. And so, as bankers, we like to see that there's a consistent payment over time, right? However, in the divorce scenario, there is what we allow for what we call variable income, where we can actually take someone. So the spouse who's victimized by the inconsistent payments doesn't get completely punished. We can kind of average those payments out over time, and there is a way to like count it and kind of take it into consideration, where it's not just like, oh, you have the last 18 months of support, you only received 12 months of payments, the other 6 you haven't received. Right. But some of these payments are bigger and some of them are smaller. So like bankers don't like the inconsistency, but there are guidelines in place that allow for us to work with that sort of a scenario and account. Now, it doesn't always work to their advantage, but it gives them something for us to work with that helps them.
That's good, because I didn't know that was the case. And I know that especially if you're dealing with a high conflict divorce, right? And you're dealing with somebody that, yes, they might have a court order to pay you a certain amount every month. But what if they go a couple months and it takes you another 6 months to actually fight them in the court system? Now if that's all that you're relying on, you can get yourself in a lot of trouble. So I think that's really smart for you to be able to give them that kind of advice and be like, hey, this is something you want to consider, getting your own income. So that's just the icing on the cake. It's not the cake, as I say. It's not what you're relying on solely, because I think that is it's especially in high conflict divorces. It'd be great if we all played fair. However, when you're getting divorced, there's usually some unfairness.
Oh, yeah, you think? Yeah. So there's funny.
Work it through. Yeah.
100%. And like you said, like it'd be great if we could all play nice in this process, right? And like I've always said to my kids when they say like, oh, something should happen, I'm like, well, I should have been 6'4" and good looking. That didn't happen either. So we have to move on from that and just kind of deal with where we're at and kind of moving forward. Yeah. But I just, when you talked about a high conflict divorce, it just reminded me of a quick story. And I think I mentioned this story to you when we spoke last week, but for your audience, I had a really super high contentious divorce sent to me by an attorney, a couple out of Pennsylvania. And these are two people who did not like each other at all. Just
Mm.
couldn't stand the sight. Took me like 2 weeks to get the thing scheduled on a Zoom call to even get them on. When we got them on camera, they both were just, I could feel through the computer.
Oh
I
yeah.
could feel the tension and the just distaste for each other. And so we start going through the process. I start explaining to them and all, and I'm just being very patient, and and the snarkiness between them is taking place during this call. And so we get to, okay, the wife who was going to stay in the house wanted to buy the husband out. And as I'm sure many people in your audience will realize, having like a super low interest rate these days is like a badge of honor. It's almost like a status symbol, like how low
Yes.
is your interest rate? And this couple had a 3.25% interest rate on their mortgage. And at the time we were higher. This was going back about maybe a year and a half or so. So we were kind of like with a cash out refinance of the home.
Mhm.
They were looking at like 7.25%, 7.5% in order to refinance. So just to kind of give you like how things work and people's mentality, two people who couldn't agree, they were arguing over pets. They were fighting over everything. And the divorce attorney warned me in advance. The one thing they could agree on was that the 3.25% mortgage should stay in place. And they were willing to, the husband who was like not being in the house was willing to like make concessions for time and other arrangements that he wasn't willing to make prior to the discussion around the 3.25% interest rate. So it was just, I found it kind of funny that in this super high contentious divorce situation, that's the one thing they could agree on, and that should stay in place. So I didn't get to refinance their home. I spent the time with them and all, but I came out of it with a great example of kind of the central part that a home plays in the process, and kind of how it can be really like a thing that a lot of things pivot around. And so,
well, it's such a high asset. I mean, a lot of people don't. And especially, I think you mentioned it before, for the one person in the relationship that's not been the one that's taken care of it or been directly involved in the mortgage, it can be quite scary to now be the one responsible for it. Or, maybe it's the wife, maybe it's the husband.
You see all different variations for sure.
Yeah. So what would you say is probably, well, first of all, you're a certified divorce lending professional. So what does that mean for people that are listening? Like why use somebody that's certified in divorce mortgage rather than just going straight to a regular mortgage person?
Well, and just kind of, thank you. That's a great question. So I got certified through a service where I had to take a class which focused strictly on, and I want to say it was an 8-hour program where you're learning just specifically the exceptions and the kind of specific ways you can handle divorce for people who are going through the process, right? That don't apply to your regular average person. Like we talked about just previously, the variable divorce, the variable income in terms of divorce.
I didn't even know. I've never heard of that. After being in real estate for all those years, I had no clue.
Yeah, that's an exception that's available to divorced people. Just a recent one that just happened that I just learned about, Fannie Mae and Freddie Mac now give first-time homebuyer status to a spouse who is getting divorced, even though they've been so to back up a little bit, in order for you to be a first-time homebuyer under Fannie and Freddie guidelines, you have to have not owned real estate for the previous 3 years. And so if you're a first-time home buyer, there are certain programs that are available to you. One is like you can put as little as 3% down on a purchase. You get advantageous mortgage insurance premium prices. And so there are certain things that go with it. It's not like, a magic bullet, but there are some advantages that to encourage home ownership, mostly designed for young people getting started. But they made an exception for people who have previously owned their principal married, they were married, their principal, residence, and that they're in the process of getting divorced. So that divorcing person, even though they've owned a home for 30 years, and they're starting, to either refinance or to, go buy something, they can have that first-time home buyer status as a result of the process. So it's it's the little
Wow.
things like that can make a difference for someone's situation. Now, I personally haven't had to put that to use because it actually just happened. I think I got the bulletin like last week or the week before, but it's those sorts of things that we look at. One of the things that's because of the interest rates, like I mentioned, being, now they're higher than they were, 5 years ago or 4 years ago even. The ability to assume a mortgage, right? So if you have a government issued mortgage, the likelihood of assumption is really much higher. Those loan programs, if you have them, there's an assumption option built into them. If you are a conventional, you have a conventional mortgage in your home, that assumability may or may not be there. It varies, and you can see there's forms where it'll tell you whether the mortgage is assumable or not. And if it is assumable, what that means for your audience is that if you have a current mortgage in place at say 3.5% and you're getting divorced, well, you can assume the mortgage as long as you qualify for the payment with the lender, and then you get the same terms and all the other stuff. Now, there's no cash out element to it. There's other things. It is huge. And again, that's one of those things where when you come across it in my position, I'm counseling clients to not be making money. Like that's something that I'm not making any money on that. But it's the right way to help that client. And if I don't make money on it, I don't make money on it because
that's the thing being in your profession. And like I was too, as a buyer's agent, we're not like attorneys. We don't get prepaid for the time and the energy. However, it all works out in the end. I realize that as a real estate agent. And so you do the right thing for the right reason.
Always do the right thing.
And sometimes in this being in divorce, it can feel sometimes that it's very, very expensive to be able to get the help that you need. And that's one of the reasons why I started Divorcing Strong, is to be able to give people resources. And I'm not saying go use every free resource out there and use people, because I don't believe in that. However, there are good people that are willing to, like for me, I take every single call. If somebody's going through a crisis divorce, I'm like, I'll take your call. You know what I mean? Because I know what it's like to be in that place where I feel like I'm drowning and I don't know what I don't know. And so I really, really appreciate you being the type of person that's like, look, it all works out in the end. And I'm going to give you the best advice I can possibly give you for your situation. And I also love that you, like, not all situations are one size fits all.
Oh gosh, no, that's one of my, it's funny, if you ever go to my YouTube channel, that's one of the, like, my taglines on the videos that I've done is that there's no such thing as a one size fits all mortgage, because every single person, every client has different circumstances, different credit scores, different risk tolerances, different comfort levels with finance and money. Like I have never seen two situations identical. It doesn't exist. But going back to the paying thing, so one of the things that clients should understand is that they never pay me. Like the client never pays me. I get paid by the bank. Like my job is I work for the bank, but I provide a service to clients that if we go through and I am able to do the loan and help them, then I'll get paid by the bank for that. And that's fine. And that's, in my career, I've been so blessed and so fortunate to have, made tons of money, and I've been, kind of flat broke on a number of occasions. And money comes and money goes. And if you live your life around money and making money, and money is the whole center of it, I'm sorry, like I feel bad for you, because that's not a way to live. And so for me, it's like, you know what, the money will take care of itself. I've been to the highs, been to the lows, everywhere in between, and I'm still here. So, if you make that your focus, then that's where you're going to wind up. But if you just focus on people and helping people, you're going to be fine. Like everything's going to work out. And so that's kind of my philosophy in life. And, like you mentioned, do the right thing. I had a football coach in college that was like his tagline, like, do the right thing. It's like, what's the right thing? Whatever the right thing is, do it. So, that's important.
So one of the things, as we're kind of wrapping up this show, one of the things I want people to remember is that, It is very important to have people that understand the nuances of divorce when it comes to all these financial things. Like there's financial advisors as well that have specialized in divorce, just like you
Absolutely.
do mortgages that specialize in divorce. Because, you had just mentioned a couple of them that I've never even heard of. And, I try to stay up on this kind of stuff and resources. And so I'm grateful that you shared that with the audience today. And
Absolutely.
obviously make sure that you reach out to Chris, because he can direct you in the right place, help you, whatever. And I love that you're in all 50 states, by the way.
Yeah, we're a national bank, and so it's one of the reasons why I love working where I work. And
Yeah.
I can work from anywhere, and I can help clients anywhere in the U.S. So that really, it's very. And I always enjoy, like you and I when we spoke, like we're both from different parts of the country, and I always love to hear where clients are from and what what's going on in their region. It's a way that makes my job that much more interesting.
It seems like you're a lot like me. Like you don't know what's coming that day, and so it's kind of a bit of an adventure.
Absolutely.
Well, awesome. I have one last question for you. So
Sure.
the question is what does divorcing strong mean to you?
Divorcing strong means to me, that's the hook. So I think what it means is educating yourself, trying to put yourself, like we talked a lot about what happens during the divorce process when you're going through it. But I think to answer your question, putting yourself in the strongest possible position. One of the things my father always said growing up was, you always want to make a decision from a position of strength, not a position of weakness. And I know in my own life, times when I've made decisions in moments of weakness or in positions of weakness, those usually aren't good decisions. But when you're in a strong position, then you're going to make better decisions. And there are a couple little ways you can do this when you're going through the divorce process. And I've counseled people on these lines where, say, for example, you're in a marriage where you're not the person paying the bills. You don't know where the money is, or how, like, what needs to be paid and when. The first thing I say to clients when I get that first conversation with them, it's like, do you understand, like, how are you involved in your own financial life? And if they're not very involved, my first advice is get involved. Like, find out who's been offered to start paying the bills. Because one of the things that we alluded to earlier, like contentious divorces, and I've seen this, and it's really a shame, because when it is contentious, there's this like want to hurt the other person. And oftentimes what people don't, and I've seen people not pay their mortgage, not pay their credit card bills. I had one woman stop paying her student loans for 6 months, and she was going through a divorce. And I was like, why did you, like, your credit score went from here down to here? Like, what happened? And she goes, I'm not paying that bill. And it's like, I understand you want to lash out at something, but take a step back. You went from putting yourself in a position of strength. Now we're in a position of weakness, and we had to work with her to get her credit score back up, which we did, and she was fine. And we actually just closed her about a month ago, and it ultimately wound up okay. But it would have been better if she had, like, kind of had someone telling her, no, just pay the bill, pay the minimum, even on a divorce, a credit card statement, pay the minimum monthly payment. Don't let your emotions wreck your financial situation, because the damage is so quick and devastating, and it lasts a really long time. It takes a long time to really come back from a devastating credit score. So divorcing strong is getting yourself in that position with education, good people, support, and information around what you have to do, what your options are, and like how to make good decisions. And sometimes that might mean taking a step back and just saying, putting a pause on it before you do something you're going to regret later. So that's what that means to me, is just really being in a position of strength through your decision making and kind of your own personal, like, taking ownership of things that maybe you hadn't had before in the process.
Yeah, I love that. And it's one of the things that one of our talking points today was, this is like how to really slow down without losing your momentum. Because slowing down to take a breather and just relax. And I love that advice is don't make decisions on an emotional state, because those usually are not the best for you. So putting the people around you to help you get that point, or you do what you need to do to get to that point, because it's just so dang important. It's just the decisions you make during that divorce will affect you and your family and your children for a very long time.
Yeah.
And future relationships as well. Awesome.
Yeah. Yes.
Well, thank you so much, Chris, for being on the podcast today. And thank you for your
Becky.
wisdom, your heart, your service to the people. And I'm glad that you're in this space with us.
Thank you. Me too.
Yeah, I so appreciate that. So hold on just one sec. So I want to thank everybody for joining us for another episode of the Divorcing Strong podcast. I've been Becky Sampson. I've been your host with Chris Henwood. And please reach out to him. Honestly, I love that he's in all 50 states. If you have any questions about mortgage or about what to deal with, your largest asset usually within a marriage is your home, and you just want to make sure that you are directed into the right place to make the right decisions so that you can divorce strong. Thanks again for joining us, and we'll see you on the next episode. Thanks for listening to the Divorcing Strong podcast. This episode is sponsored by Only Subpoenas, where we make subpoenas simple, powerful, and 100% compliant. If you're having a hard time getting the information you need to settle for a fair and equitable divorce, let us help you. Whether you're an attorney or you're navigating divorce on your own, subpoenas can uncover the truth, secure the evidence you need, and level the playing field. To see how we can help, book an appointment by visiting our website at onlysubpoenas.com.